Hi everybody, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Well, this was some week. A nice collapse on Monday, but stopped right at our targeted low. And then 3 powerful rebound days, adding up to a 20% gain. Because of this stunning uncertainty and volatility, I should tell our FANG Friday viewers that we are now doing live webcasts on the overall market events and all stocks, where our clients can ask questions directly to me. Those of you who have been watching for some time will hopefully see that this is a good opportunity to sign up and try our service. To that end, as an incentive, the next 3 who call in to inquire about the service will be given an introductory discount of 50% for the first 3 months. We already have a few FANG Friday viewers who signed up last year in the May-September period who have emailed us to say how glad they are and how well things have gone. We are now doing these webcasts of this in this particularly scary time to get our clients through the next little while more comfortably. Given how quickly things have been moving, however, there is often not much time to make decisions these days. I'm sure that this will pass. It always does. But for now, volatility is the watchword, and timing is important. Okay, by way of a little bit more background, the target low for the Standard & Poor's 500, which those of you who tuned in on my show on BNN a couple of weeks ago will know that that target was 2175, and it's of interest to note that the S&P stopped there on Monday precisely within 2 points of that low. However, I have to add one other thing before we get into looking at the at the FANGs, and that is to say that the market trumps the movements of individual stocks. So we are going to see some imprecision as we go through the FANGs, due, of course, to that massive reversal of the market and the subsequent 20% gain. So let's start off with Amazon. Well, there's not much to say here. Amazon has come through this whole thing absolutely beautifully, as I think we suspected. And the shares have done nothing except really pull back to the HB2. Remember that a couple of weeks ago I showed you that that the breakpoints had been changed because of the new balance sheet up there. So when the stock corrected, it actually just simply corrected down to the bottom of from the HB3 to the HB2, and has subsequently come through this whole thing absolutely beautiful. As this is the one company I would suspect that probably is most needed at this time, it is held in very nicely. Turning to Apple for a moment, you can actually kind of see that that abortive breakdown on Monday, but the stock actually closed pretty much at the top of its range, and on Tuesday, Wednesday, and Thursday, the stock has rebounded very nicely. I could say that breakdown, which by the way was quite severe, as you can see here, did meet my 3% rule, but it did not meet my 5-day rule. However, I will be honest with you to say that most people probably including me as well, were virtually frozen in the headlights of this one. In any case, given that the stock market was coming right down to powerful support at its growth price, I would not have done anything in any case. Okay, good. Taking a look at Google, it came down perfectly to the super growth price. That was the target that I set for it, and it's just been kind of hanging around there ever since. So not much that we can say there right now, but it really also has shown no tendency to rally either. Facebook, well, I've said for some period of time that I would love to be able to buy Facebook down at the super growth price, and that's just exactly where Facebook got to. So it hit, and quite frankly, it's had a nice rebound, but if it pulls back there, I wouldn't mind having another chance at buying this stock. Netflix, well, we actually had a clear 3% breakdown and 5 days, so it gave me a confirmed market signal, which was rescinded very quickly this week. My only saving grace is the bounce potential of the S&P 500, which was coming. Fundamentally, I am still concerned about the streaming competition, but maybe the COVID collapse will put that off. NVIDIA, well, you want volatility. NVIDIA gave you volatility. A 58% round trip from its HB2 down to and below the HB1 and right back up again in all of 10 days. I suspect there's going to be stout resistance at the HB2 at this point. And then finally, of course, here's Microsoft. It almost met, I think, within about 2%, our upside target for the stock at its HB1 after it broke out. Remember, breaking out of that HB1, 10 times book value after months and months and months there. Well, it virtually got up there, has set back. And by the way, this is a technically beautiful stock. It set back there, had a nice bounce, as we would expect a company would do, checked back again, dropped down, had a sort of gave us a sell, but had a little rebound there, and then a confirmed sell signal. Now the stock has moved back up to the HB1, but not through it. Anyway, in sum, Amazon, hang in there. Apple, the HB1 rebound, but there's a warning when it broke through there. Google, it's good. It hit our target, our expected target perfectly, but the stock is forming an indecisive low, so I'm not 100% sure about this one. Facebook, well, as I say, I love to buy this stock on a pullback. Netflix, my sell was rescinded. But I call that kind of trading sloppy trading, and I'm not comfortable with the recovery, particularly given the streaming competition coming. NVIDIA, a huge recovery to the break point, but I think that may be it. And Microsoft still has not given us a breakout, which would have to do to give us a sell again. For those who would like more information, you can check in at strategicanalysis.ca or call us directly at 416-489-3603 for more information and possibly to try our service. And remember that it's entirely tax deductible. Anyway, this has been Ross Healy, Chairman of Strategic Analysis Corporation, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.